Investor, Matt here from Epic Real Estate, where we show people how to invest in real estate with an emphasis on retiring early. And today we are going to talk about the subject to transaction. It's a very popular subject these days, and specifically what there is to do once you have locked up a deal with a seller that has agreed to sell you their house subject to the existing financing. Like what happens next? Like literally like step by step documents, moves, and everything you got to do there to pull it all together and pull it off and create a nice little deal for yourself. So we're going to get to that. But before we begin, if this is your first time here, really glad that you found us. And if you like what you hear, make sure you hit the subscribe button, hit the like button before you go. And if this is not your first time here, welcome back. And you can hit the subscribe button, or if you haven't, then you can hit the like button too. And thank you for sharing this with your friends and family. I really appreciate this about you. Here we are on, the podcast is like almost approaching, I believe, 12 years. The YouTube channel been here almost as long, off and on, but we've been pretty steady for the last few years. And I just wouldn't be here if it wasn't for you doing that. So you're the absolute best for doing that. So thank you again. And by the way, if you'd like to look into working together one-on-one for your real estate investing business, and you can go over to reiace.com. There's a few questions that you can answer about your goals and about what you want to, and about your current situation and where you'd like to go and what we can do to help you get to the next level. And if you like what you see over there, then you'll have the opportunity to pick a time for us to hop on the phone and just brainstorm some ideas about what it's going to take to get you to that next level. Alrighty? That's over at reiace.com. All right, let's dive into the show. Today I have a very special guest joining us that's, I would say, she's in the thick of things when it comes to creative financing transactions and putting these types of transactions together, just overall real estate transaction coordination. And so please help me welcome to the show over from Constant Close, Miss Rochelle Jarvis. Rochelle, welcome to the show.
Hey. Thanks for having me here. I'm excited. Let's get into, like you said, the weeds of all the different documentation, but happy to be here with you.
Right. Perfect. Thank you for doing this. I've done a number of subject to deals over the years, and I know there's a specific way that I do it. But the more I do it and the more interaction I have with other real estate investors, I come to learn that there's more than one way to skin this cat. So I wanted to have you come on and just since you're doing this every day on a day-to-day basis and you're doing it right now, kind of give us the lay of the land and how it's all working as far as subject twos go in this environment. But first, tell me a little bit about yourself and your company, Constant Close, and what you guys do for real estate investors.
Yeah, so Rochelle Jarvis, I've been around in the game for a long time, about 15, 16 years. Started off on the retail side. My background is finance and mutual funds, and I wanted to buy back my time with real estate and create some wealth. So I do own a company named Constant Close. We are a national transacting consulting company. We are in all 50 states, but I am also an investor. The way that this company came into fruition was being in as an investor on the acquisition, disposition, and the whole ride of knowing that we've needed a different type of breed of TCs. So the TCs that I have right now all have a sales background. And the reason why they do is because they do a little bit more than just push paperwork around. Although you can hire us to do that so that you can go and close more deals, my TCs will get on the phone with the seller that's agreed to terms and kind of push it over the finish line. So different things that they do is, being able to articulate what's in the, being able to articulate different types of things that some investors aren't really equipped or don't know quite yet in regards to what about a note, a promissory note, all the different facets of the subject to and the process. So we're able to do that in all 50 states where you come and you work with us. We have our title and attorney partners. We can pretty much self-perform anything. So we're the connector piece for everybody. So we're here to help everybody close deals nationally.
Super. Such a great service. And I can't believe you guys are like from my perspective, the first ones to even think of this to help people out with these creative financing transactions. So it's fantastic. So let's focus today. There's lots of different creative strategies that we could focus on, but let's focus on the subject to. And first, just really quickly, I just want to define what a subject to is for anyone that's, tuning in. And is a subject to transaction when you're purchasing a piece of real estate subject to the existing financing on that piece of real estate. So you're essentially buying the property and you're going to take over the payments on that mortgage that's attached to the property. So you, the buyer, will appear on title, but that mortgage, that debt that's attached to the property, that financing, is going to stay in the previous seller's name, the previous owner's name. And when a lot of people hear that, they go, "Wow, how do I get more of those?" Right? Sign me up. I mean, I'm buying a house, and it comes with the financing already attached to it. So it's a really smoking deal under the right conditions when the situation fits appropriately. And so that's what it is. And I don't want to talk about like how to find them, how to negotiate them, and all this type of stuff. We've talked about that ad nauseum over the years here on the channel. And if you want to catch yourself up with that and a bunch of other creative financing strategies, I put a link down below in the description, creativefinancing.us. That'll walk you through subject to transactions as well as a bunch of others. But let's talk about once we get the seller to actually agree to the concept of subject to, Rochelle. So, I mean, you kind of said something there, but I wasn't totally clear that you actually did this too. So when a real estate investor comes to you, they can come to you in two different places, like when they almost have the deal done or when they actually have the deal done, right?
Right, exactly, which is super, super exciting. If you don't mind me just piping in and taking it from here, but and that's what I was talking about. It's a different breed of TC. We do know that transaction coordinators are an implemental part of a team when you're trying to grow a business and just offloading paperwork. But creative finance might not be new to me and you, Matt, but it might be new to a lot of people. I know it's huge and really brand new on the East Coast. And our job is to help them learn the process. So let's talk about that. So if you have a contract and you send it over to me, I don't know if I'll be the only one to say this, but that doesn't mean it's a deal. I mean, it's a deal when it's a creative deal, especially a subject to. Now, why is that? The most important part when you're handing that over, what does that process look like, is handing over as much information as you've gotten from your acquisition team or as the acquisition individual. Now, what does that mean? Setting and being able to set your TC up for success is transferring all of the communications of all the different parties that are involved, any documentation. Well, let's talk about a real life scenario of the acquisition type of personality paperwork. Their personality is to go and to get the deal and to hopefully write it on a contract. When you transfer it over to the TC, our process is going to be to gather all of that documentation. So gathering that documentation would be the first process as you're handing it over. And that's us taking a look at your contract and saying, okay, you used a traditional purchase and sell. There's different disclosures and things of that sort that Matt, I'm sure, has shared his channel in regards to setting up the proper way to do subject tos. But it's gathering all of that information in the beginning to make sure that it is the deal. So we are going to transfer all of that information that we have, and while we're gathering information, to title or attorney, depending upon what state you're in. So we will open up escrow. I would think a lot of people know what escrow is, but I get the question all the time.
Let's pause for a second, Rochelle. Let's step back for just a second, okay?
Yeah.
So the investor comes with the document, the contract, and they've got the price in there, and in the terms it says subject to the existing financing. And they're going to give you that. What other information besides the contract would be helpful for the real estate investor to give to you?
At least all the parties everybody, all the people in the transaction, all of their contact information, because the TC's job is going to gather anything in addition that we need.
Okay, so we need the contract and everybody's contact information. That would be obviously the buyer, of course, the seller's stuff, of course. And do you need the bank's information as well?
The bank's information would be very, very helpful. I think it should be verified on the acquisition side to make sure that you have a deal, but we gather that. If you have a mortgage statement, if you have anything that has to do with the numbers, whether that be heirs or probate, whatever your deal has, yes, transferring that over with the TC, it would be such a big help.
Perfect. Now you said this a couple times, and it means one thing to me, but I'm starting to gather it might not mean the same thing to you when you say to see if you actually have a deal.
Mm-hmm.
What do you mean? Like, to me, when I say I don't even know if you have a deal or not, meaning did you get it at the right price? Is it going to cash flow if you decide to hold on to it? That's what I'm thinking. But I'm gathering you're saying something a little bit different.
Yeah, deal is, locking up contracts is an amazing thing and it's great. But with these creative deals, especially with sellers, we're helping our sellers. There's so many different elements to it, you guys. And I know that part of the acquisition personality too is not to really verify and gather all that information. I mean, it is what it is. I know we have some amazing acquisition people out there, teams that do that very well. But generally, working with people is that they don't really gather all the correct numbers. And the bottom line is a lot of times we're in competition. This is the way the market is, right? We're wanting to execute that deal as quick as we can with the seller so we can do our due diligence. So it is part of the process. So that due diligence is me verifying, is that their approximate mortgage? Are they behind? Is their reinstatement really that amount? Now, I know that once the seller is behind or if there's any distress, when I get that preliminary title report, which we can go into in a little bit, I'm looking for other things. For me, having a deal is verifying all your numbers, making sure that it actually is what it is. And then for that beginning process with your TC, whether you're working with us or somebody else, needs to be done very, very well to make sure that you are devoting your time and effort into an actual deal.
Got it. So the actual deal is making sure that you've got really all the numbers correct, right? What the loan balance is, if they are delinquent or past due, we want to know what that's going to be. We need to know what the actual amount is going to be required to bring it current, right? And put it back in good standing if it was delinquent. Okay, good. So all of that. One thing that I always have people do on this side is get a notice of release authorization from the seller, so you can talk directly to the bank, so you can actually get those numbers. So that's a good piece of information to have, because someone's going to need that at some point to talk to the bank on the seller's behalf, right?
Yeah.
Okay, cool. So you got the contract, you've done your preliminary evaluation to determine whether or not they do have a deal, and then what? What happens next?
At that point in time, part of that, I touched on it just a second, is the preliminary title report, right? Very, very important. So many different aspects, as you know, Matt, is looking on there to see, well, obviously, if we have the right seller, all the different things. There's no other judgments, liens, memorandums at that point in time. While we're doing that process in the beginning, you guys, we need to submit earnest money, right? We need to submit all the things to make sure we have a properly opened escrow with the attorney or the title company. I know there's a lot of wholesalers or investors that try to get around that. And I do understand if you have like a relationship with your title or your attorney, but it is the right thing to deposit earnest. So we will also handle that process of getting all of that in, making sure the beginning part of the escrow, preliminary title report, and then obviously depositing escrow money is part of the process too. So once we're complete with that, we're going to head on to how are you going to position this property as far as a TC. As you guys know, so many things you can do with the subject to, which we won't get into, but our job is also to do that verification of what you're doing with that deal. So that will be, once again, gathering that documentation and being able to set it up the right way, whether you're assigning it, wrapping it, whatever it might be, making sure that we can gather that disposition paperwork, get that done, deposit that earnest money on that side of that transaction, get everything in line, everybody locked in to make sure that we can close on the property on time. If you are not doing any type of disposition strategy, and you want to close on this on your own, then we would skip that step. And once we have a clear marketable title, all the numbers, then we will move that on to close of escrow, which would be our next step, would be looking at that settlement statement, that HUD statement, making sure that they got the numbers right, everybody's getting paid out what they need to be, all the payoffs, and then we can move on to close of escrow.
Perfect. So one thing that I think is one of the more valuable aspects of your service is the relationships that you have in place. So you're not having to go to a closing agent and do a bunch of education and explaining this is what we're going to do. All that, those relationships are intact, right? So,
Correct.
So that's a huge barrier for a lot of people, because they might not understand it completely themselves, and they got to go explain to someone else who probably doesn't understand it either. So blind leading the blind, so to speak. But when right, so when you go do it though, you don't have to go through that process, and you're just going to say it's just a buy and hold. That's all we're going to do. We're just going to buy this property and hold on to it, turn it into a rental. So what kind of communication goes on, or if any, because this is like the big elephant in the room for most people, is what
Right.
about the bank? What is the bank gonna say? So how is that interaction? What goes on there for you?
Right. Well, the great thing about leveraging, as you'll hear with leveraging experts, is that we know how to handle that communication because we've closed thousands of these transactions. So what Matt said in the beginning is actually very true. We get an authorization signed in the beginning. And the way that we approach the lender is we're always helping the seller in some way. We never say we're from the title company or things of that sort. And we're very brief with our conversation. So all of us know some of the concerns that people might have. But the most important thing, I think, you guys, when we're talking about this, is controlling that conversation is very, very important, and making sure that your seller is aware of what can they not do, or being educated in the process. Because one thing that I don't hear a lot of people talk about is the risk that sellers play in these type of deals. And that would be me being transparent and saying, absolutely. We get so excited when we get that executed contract and we just want to move it forward to close of escrow, but it's getting all of that information, educating your seller, and being able to control those conversations with the lender and represent yourself as someone that's helping the seller, right? The lender is not going to be aware that they're selling the deal, because just what Matt had said is we're taking over the in-place lien that's with, let's say, Wells Fargo, and the deed is transferring. So we position ourselves as either a property manager or helping the seller, whether that be a reinstatement. We're helping the seller gather all these figures so they can reinstate their home. So our position is always, on the side of the seller and helping them gather that information. So, but knowing how to articulate that can be a point for everybody where they feel like, oh, Rochelle, I don't want the due on sale clause. Oh, Rochelle, da 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 da. So we kind of control that. But that would be the best thing if you're doing your own deals. Get the authorization. Pitch it to the seller as a customer service piece. You know what, Mr. Seller, we're going to make this very simple and efficient for you. You got the contract signed. We will give you weekly up the lender. You don't have to do things like that. When you position it that way to the seller, they're like, oh, okay, thank goodness. I don't have much to do but sign the closing documents. That's how we position it, control the conversation with the lender, representing ourselves as a property manager or helping the seller gather figures. So.
Okay, so that's how you position yourself during that conversation and
Right.
gathering information and making sure everything's accurate in that regard.
Mm-hmm.
So then we just go ahead and we go ahead and we fund the seller whatever they're going to get out of this deal, if anything, and then the new owner, the buyer, is going to start taking over those payments. Now, I guess the second big elephant in the room is once the lender is notified that title has transferred, then what?
The lender being notified that title had transferred, they're not aware that title has transferred. Because, I mean, could there be are we talking about a scenario if they are aware of it? Is that what we're talking about?
I guess when they are notified, when they are, the insurance, I guess, is what really notifies them, right?
Right. So,
right.
But that's a good point, if you don't mind me jumping in. So doing the transaction with these subject twos is the checklist, right? Documentation, escrow, dispo, HUD, and closing. Now, what about afterwards? And this is the part where I feel like a lot of our value comes in. It's to the question that Matt's saying, what if the lender is aware, or what if insurance does call them? We have something called post-close documents at Constant Close that we created.
What are they called again? Say that again, slower.
They're called post-close documents.
Post-close documents, okay.
And the reason why we created them, as I said before, I'm an investor, so I know the pain points. It's like, okay, my transaction's done, but how do I handle insurance? What do I do about servicing? What if the payment is due in a week, but I haven't had servicing, already ready to go because I don't have my recorded documents? So post-close documents, whether you're working with us, which I hope you do, or not, is to be able to set up the transaction the right way. You want to be done with deals, add them to your portfolio, and move on to closing more deals, not having headaches year after year. And I've seen that in many businesses year after year because it wasn't done the right way. So post-close documents include adding yourself as additionally insured to the current insurance policy.
So you're leaving the current in place?
Yes, I am leaving the one in place. Now, I do prefer to be able to switch it out, but I don't feel like that's the most common occurrence that I've seen happen that goes I like to recommend processes where I know they're going to work versus like switch it out. I've seen a lot of people, unless switching out is the best way to do with insurance, but you have to have an amazing insurance agent that can handle those conversations. If you have one and we're working with you, we'll talk with them. That's the best way to do it. But what we do with the post-close documents is you add yourself as additionally insured to the current in place policy. You get a limited power of attorney signed at close of escrow with the seller's closing docs that you will send with that document for insurance. They will add you as additionally insured and upload your limited power of attorney to the insurance company. Now, what does that do? One, it adds you to the policy. Two, you have a limited power of attorney with the insurance company, meaning you need to call, you need to get any information. Authorizations are great, but power of attorneys hold a little bit more weight. And that process is repeated with the lenders. We have post-close documents for the lender that says, hey, Mr. Lender, this is my new property manager, Rochelle Jarvis. Even though I'm the buyer, I control the communication again because the number gets changed, the address gets changed. So if the lender needs anything, are they going to be calling their seller? Because what happens in here when you call a seller and you say, hey, your insurance, they're going to say, oh, I sold my home to Rochelle. They're not going to say subject to. They're not going to remember the nature. That's our job to do that, right? So alleviating that risk is controlling that conversation and being able to navigate that with the lender. So that post-closing document will go to the lender. Then we have two more. One is online information. We gather that information because we know sometimes payments need to be made right away. And so you can access the online account. And the second thing is we have something called a post-close claims insurance letter. And this is for me being in the weeds and seeing something happened. The insurance company sent the check in between closing and getting those post-close documents. And it's only like maybe 7 to 15 days. So it happens, right? It's the nature of our business where things like this happen. So they mail the check to the seller. And what does the seller do? They keep the check, right? They have the check. And now it's a game to hunt for the seller to get that written over to the buyer. So we came up with this post-close claims check where the seller will sign it and get it notarized at close of escrow as another form of documentation. My job for you guys is to play devil's advocate and to say, what is it going to look if you get in front of a judge and I can make sure you have disclosure and documentation that proves not only do they know the transaction that they were involved in, but they also said, hey, if I get a check, I will remit it to this address within 48 hours. If I don't, I can be fined this $50,000. So this is from being in the weeds. So that post-close documents is the way to set up the investor for success on being able to close the deal, move forward, and go capture new deals.
Awesome.
Yeah.
So all of these years, I've been using a land trust to do all of my subject twos. And I'm gathering you don't do that at all.
I do it with VA loans. They're very, very common to do with VA loans, and they kind of have to be done that way. But I do feel like there's a lot of, when I am dispositioning my sub-twos into a wrap or a seller finance, I will definitely use a trust. Part of the reason why I will use some type of trust is because I've had people that have died in the process. And when you have a trust, you have a trustee and all of the different things, you know, to be able to manage that deal going. Trusts are very common in VA loans. Part of that is a lot of us use the word assumable. We really need to know what that means. But the VA loans, the deed is not going to the buyer's name. So you're like, well, why would I do that, Rochelle? Well, you're going to get ownership rights. You're going to have the rights to do what you want with that VA loan in all 50 states. Whether it's a land trust, contract, or whatever type of deed you use to close it in, we definitely use those, and they're a lot more popular with VA loans. So, but not with all of our deals. No, I don't.
Okay, well, good to know. Yeah. Good to know. In the event you do get a call from the bank asking, you know, what's going on, what is the typical response that keeps them at bay? I have one, but I want to know what yours is.
Well, normally, to be completely
and real quickly, I'll let you think about that for just a second. I'm talking and I'm taking things for granted. Like I forgot that there's people even listening because I'm just talking to you. But what I'm addressing in here, I was talking about these elephants in the room. due on sale clause is what everyone is kind of always concerned with. This, from so many different angles, so many different times, but it continues to come up. And so I wanted to create a really good documentation right here, so I can just say, go watch this video, right? So the due on sale clause is if the bank catches wind that title has transferred. Some of the due on sale clauses are written in such detail that even if they detect that the seller has the intent to transfer without paying off, it could technically trigger the due on sale clause. It gets really, really meticulous. And so what they could do is they could call the whole loan due to where you actually have to pay the whole thing off, right? And so we want to obviously avoid that. That's what we're really talking about. So in the event, and it sounds like we've got all this stuff. We've changed our positioning of how we talk to the bank, right? We've got our pre closed docs, and we're covered the way that we've covered our insurance, because typically it's the insurance that will notify the bank or how they'll catch wind that title is transferred. So we always want to make sure that the insurance is straight. So that's why I was addressing that. But in the event, now we'll come back around. So in the event that the bank does, hey, Mr. New owner of this, what's up with this?
So I'm going to tell you live experiences of what I've experienced. Okay. So it's all depending upon the bank. I've had some banks that have let's be very clear. It doesn't happen that often, right? I do see a lot of people talking. Yeah, it doesn't. I do see a lot of people talking about trends of inflation and all these different things. That's very interesting, but that's another topic. But when it does happen, it's usually two different scenarios with two different types of banks. So we have both Wells Fargo, and then we have our local bank, right? Normally our local bank, our bank that's, per the town, like a Desert Schools, like a credit union or something like that, they are more apt to work with you. That's my experience. They are more apt to work with you to say, okay, you're assuming this loan. And that has been my experience with them, of working with them to be able to either make the loan right, to be able to say, okay, yeah, that obviously the title has transferred. Oh, we want to reinstate it. We want to continue paying. So they're more apt when it comes to Wells Fargo or Chase or things of that sort, or the bigger banks. Very, very unlikely that they do that. But if they do that, I find that the quickest response to that, what a lot of people do, is they will actually refi the house out at that point in time. And this could lead us, Matt, into a conversation that maybe we'll have another time, because my background is investments and mutual funds. So I'm all about risk tolerance and things of that sort. So I won't go on a tangent, but those have been my real life experiences dealing with big banks and then smaller banks, and kind of what was the solution. It was either refinancing out of the big banks, or it was working with the smaller banks and making it right and then moving the deal forward.
Perfect. Okay. So with the smaller banks, they tend to be more workable. The bigger banks, we're probably going to have to refi out, right? Yeah. So to play devil's advocate, this strategy of subject to is really appealing to newer investors that don't have the money or can't qualify for a bank loan. And that's where the real appeal comes from. So in their event where they might not be able to qualify for a refi, what's the next step?
If they can't qualify for a refi, they need to raise some capital to be able to do that. I know a lot of people talk about equity assurance. I'm sure you've heard that before. I don't know about your experience, Matt, but I haven't had any positive experiences with it. So that's never my go-to. I don't preach it because I haven't had anyone successfully buy the product. So at that point in time, it's, doing what you can to pull from what you have in your investments. This is why I mentioned risk tolerance and things of that sort. If you're in the beginning of the game and you're 18 and 19, you need to take into consideration the investments that you're involved with. That's just my personal opinion. But I do feel like if you're in the game and you're doing this and you're adding to your portfolio, that you should have the network to be able to raise those funds and to be able to refinance it out. Because it's such a rare process, it wouldn't be something that I would be fearful of, but would be mindful of and be able to do that. But that would be kind of the process that I would think they would take next. What do you think?
Right. I'm really glad that you said that, because I think just the nature of the description of what subject to is, it is so appealing. Like, oh, how can I get more of those? Right? Let me go stand in that line because that's all I want. But you're right. It's not a risk-free strategy. There are some potential, things that you might have to manage down the road, and you should be prepared to manage those, right? If this is your very, very first deal, and this is going to be a long-term buy and hold for you, is what your strategy is, then you should have an idea, of worst case scenario, what am I going to do? Who am I going to turn to?
Yep.
But if you got a portfolio, then, it's easier to manage the finances on a whole portfolio than it is to go out and find new deals or deal with just one property all by itself.
Absolutely.
Correct.
No, I agree with that. I agree with that completely. I actually, when we have time at some point in time, there's some different strategies that we've been going over in regards to alleviating that subject risk that I'm sure that you're well aware of. But nothing to be fearful of. Very, very uncommon practice. But when you're investing, you're doing anything, just be mindful of different strategies. What would I do? What's my plan B? I guess it's just live that way in life. We live that way in life anyway. It's like we're going to take this job, but if this job doesn't work out, or we're going to, not quit our 9 to 5 and just jump into real estate when we have 4 kids that we have to feed. Just like always being mindful of your scenario, having a plan B, and being aware of that as you're, stepping into this real estate realm. But it is one of my favorite strategies. I believe so many times. And the thing about it is, invest in your business, you guys. When you hire someone like myself or a mentor like Matt that's an expert in the industry, we've come up with all of these processes to protect you. That's the whole value that we're bringing to you, is let's do it the right way and really eliminate that risk as much as we can. It can never be zero, but that's not any investment. But let us help you do that and teach you the process. And then you can do it over and over and over again and not have to have that any type of worry or concern in that way.
For sure. And to put the worries even more at bay, I guess, would be, this is like, I'm thinking about my 15th year of investing, and I've never been called on a subject to ever. And I've been teaching for probably 9 to 10 years now, coaching, and I've only had one student out of thousands ever get called. And it was a simple phone call, and the bank was like, oh, okay, well, just make sure you keep making the payments. And that was over. That's really literally how it ended, right? So, but it is something that you should be prepared for, because it can happen. And so something you had just mentioned, and maybe you have an answer for this, maybe you're thinking about this or not, I don't know. But when we talk about the trends, right? The market trends, the economic trends. Yeah. The reason it hasn't been an issue for so long is because since 1970, when kind of people started doing the subject twos, because the interest rates were so high, they've been on a steady decline ever since. So financially, it doesn't make sense for the bank to call a loan due to write a new loan at a lower interest rate. That would be ridiculous. But now, over the last couple of years, we've hit our all-time lows. The Fed just met yesterday, and as their first raise in the interest rates in the last 3 or 4 years, I think is what the number was. And so there could be an environment, and they're kind of signaling that they're going to continue to raise those interest rates. So there could be an environment where it might start making economic sense for banks to call these due, or the due on sale clause due, to reestablish a new loan at a higher rate. That's why they would want to do it. I mean, I'm sure you've thought about it because you kind of mentioned it briefly. What are your thoughts on that? I don't think there's an immediate danger, but it could within the next year or two.
Yeah. Well, we're, inflation. What do they always, it's what does the Fed always do? There's always 2 ways they do it, right? They raise interest rates and taxes. That's what they're known for doing. So it's at, the all-time low, I don't even know how long. This is like really the all-time low, guys, but in like years upon years upon years. So we know that they're going to go up. We just know that it's going to, and it might go like this just a little bit, but I feel like it's going to continue to go up. And I do feel that it does mimic that time in the 1970s where they were really, really high. Because when interest rates get really, really high, let's talk about 2 things. One, are you going to a bank to get another loan? Chase, Wells Fargo, Rocket Mortgage? You're not, right? And then one, you're not going to that. What does that do to the bank? That alleviates them from getting that money, moving that circular thing that they do so well, you know, around and around. And then we have sellers. I said it in the beginning, sellers are a risk. And that's why when I get some transactions and they say, well, the seller doesn't know, I'm like, hold up, just wait a second. You know, as an advocate for you, let's educate them on that, because it's not the nature of the business for the seller to remember subject to in a year or 2 years from now. They're just not going to, right? We risk because we're in it day to day. So the sellers, I'm always thinking, okay, what if they sell their home that's at 3.5%, and let's say the interest rate goes up, or their scenario changes where they have some distress later on in the years? Do you think that they are going to want that mortgage back? And I think they will. So I do feel like there's a couple of things that we could, you know, be aware of, like I said, mindful of. And this is any type of investment. This is one thing that I learned getting my licenses. It's like, my job is to consult you and to say this is what it is, and then to help you to do it the right way. It's not, nobody can ever predict, no one can ever say this is what's going to happen, but a good investor is also in my opinion, a financial type of investor where they're aware of their portfolio. So I would just, like I said before, keep these things in mind, but that would be my opinion on a different type of risk. And it is mimicking that time in the 1970s, 80s, where the interest rates went up pretty high. And so that would be my thought process of the bank. You know, that is what they do. They want to loan out new money all the time. That's a fact, you know. And sellers can be a risk, and interest rates are going to go up. I mean, that's how they control it, you know. So it kind of is what it is. Yeah.
Perfect. So I've got some questions. We'll go through the questions, but if you'd like to work with Rochelle and Constant Close on her next, on your next deal, it could be her next deal as well. You can go to creativeclosers.net, and that's the little web page that she set up for me specifically. And so go there. It's powered 100% by Constant Close, but it'll let her know that you came here from the Epic Show, and that'll be really helpful for her. And so you can go to creativeclosers.net. And if you have some questions, Rochelle, you want to stick around and answer some questions?
Would love it. I'm seeing them in the chat right here.
I'm going to scroll here through the chat and see what we got here. There was a really good one, and this comes up in our turnkey business all the time. Rochelle, do you cover New York City or New York State?
Absolutely, we do. Yeah, we're in all 50 states. We have a great attorney out there that's done tons of creative deals with us. So New York is, we've done hundreds of transactions there. So yep, we're definitely there.
Perfect. No problem. I love that. People ask me all the time, like, well, gosh, you know, she should just go through the phone book. Because New York, I don't know why New York is so difficult. Like, they can really be complicated sometimes.
Well, the thing about it too is some attorney states, you guys, I love attorneys. Okay, I have some attorneys in my family. I wouldn't say anything bad, but when it's a brand new thing, sometimes it's just they're used to kind of living by the letter of the law, you know, of what they're doing, and for them to branch out to something like this sometimes can be really, really hard for them to do in a lot of those attorney states. But I mean, this is subject to, how long has this been around? Since like the 40s and 50s. This is nothing brand new. It's just working with the partners that are willing to help you close your deals. So
correct. Perfect. Okay, so here comes from two rock stars here in the Epic community, Christopher and Letitia. What if a seller pulls a HELOC? I guess they can't do that after they've sold it, though, right?
They can't do that after they sold it. So I hope that's what you're talking about. So if there is a HELOC that's involved, you will take that as what we call exception to title. HELOCs are a little bit different, and you would put something in your contract. So if you were working with me, Christopher and Letitia, I would say, let's write something down in our contract to make sure that they cannot pull from it. I've even had people negotiate it because the HELOC's been free and clear, that they could, you know, take from that HELOC up into a certain amount. But with HELOCs, you have your payback period, and then you have the period where the interest rate is locked down and they can't pull from it. So if you have a subject to deal or any creative deal that has a HELOC on it, see where it's at in that period, whether it's in the payback period or whether they can pull from it. That way, you know, what do you need to have in your contract to make sure that you explicitly write down what they can and they can't do, agree upon it. Once again, playing devil's advocate, making sure that you have that and saying this is what we've agreed upon. So they could, after close of escrow, definitely could not pull from it unless it's negotiated. Before close of escrow, they could. Yeah.
Perfect.
Yeah.
Here's one of these little things that we always take for granted, but I'll feed this question to you. Is transactional coordinator the same as the title company doing the paperwork, or is TC synonymous to disposition? Though that's all over the place. So
yeah.
There's 3 different things to address there.
Right. Like talking about the TC role, I've even had people say, like, why would I hire you if the title or the attorney are going to be doing the paperwork? Well, we're talking about everybody wants to scale, right? We want our businesses to grow. One thing that I've learned from being a business owner of a couple of businesses, I need to have the right players in place. I need to be able to delegate. And I know that can be hard for all of us entrepreneurs, but delegating that process, once you get 3, 4, 5, 6 deals, the earnest money, the title company, the preliminary title reports, the post-close documents, following up with the seller, scheduling closing, all of that stuff just pulls at your time. So even though I will add, we can support the attorney in the title company. I write a lot of notes in deed of trust all the time because the attorney or the title company can't do that, which we support our clients in doing. We are there to help you buy back your time so you can go out and close more deals. So we will help with the acquisitions, the dispositions process, contracts, and all of the millions of things in the escrow process.
Right. Yeah, so transactional coordinator, not the same as title company, right? The transaction coordinator is the one that's going to coordinate your transaction. So kind of your intermediary on your team between you and your title company, your closing agent. Yep. And disposition, that means just how are you going to sell it? What's your exit strategy, right? Are you going to hold on to it and use it as a rental? You're going to flip it? You're going to assign it? Whatever that may be. So that's what the disposition means. What was one other thing you're saying there that, as far as why would you hire a transaction coordinator? Well, I was a real estate agent for 4 years before I became an investor. And I never once did my own paperwork because just the idea of doing the paperwork gave me a headache. And there was so much that the broker was holding me accountable for that I just didn't want to miss anything. I just want to make sure someone else did it. And I would just come in that, probably 2 times during that transaction. And my TC would have a bunch of steps, just sign here, sign here, sign here, sign here. And I got all done and everything was fine. And then it all got all in a nice little binder and handed to me as a nice little package when it closed. And so I got really used to that as a real estate agent. And when I became a real estate investor, I went out and found a transaction coordinator to do the exact same thing for me. And, here we are, like I said, almost 15 years now as an investor. And I've got a pod that I paid probably $300 a month for that's just loaded with boxes and boxes and boxes of files of all of my transactions. Because you might need to recall on those someday if you ever find yourself in a situation having to answer some tough questions. And so you want to make sure it's all done correctly. And so I think that's probably maybe the more important thing. I'm just a little bit adverse to paperwork, but I'm more adverse to, legal ramifications if I should mess something up at some point.
Right. And you go big enough, that's something that we all kind of have to deal with, right? If we're painting the picture, totally. So that's
so I want it done right for sure, right?
Yeah.
Okay, so it looks like we're wrapping up the question. We'll go through one more here real quick. Is your service for all strategies and creative financing like lease options, sandwich lease options in Texas, stuff like that? Yep.
Yes. Yep. We can do all of those. Servicing, strategies, all creative finance. We do wholesale too. I think we've just got more popular for our niche in creative finance of knowing all the different strategies and things like that, but definitely could help out with that in Texas or any of the other
Perfect.
states.
One thing that I asked you right in the very beginning, I just want to confirm and for everyone's benefit, when you're doing an assignment, that's really easy. You're signing the contract to another investor. But if you were going to do a double close, do all of your contacts, do you have the ability to use like the C buyer's money to pay for the A to B transaction first? Or are they going to need transactional funding more these days?
Right. It's all going to be the mistake and the honest answer for what's going on right now. So it's very common in the West Coast states, Arizona, Texas, California, things of that sort. You can definitely use the C buyers funds to fund the A to B, no problem. But if you're going to get into Chicago, if you're going to get into New York, things of that sort, you're going to be double closing. So, and the closing process and what they can do is not based upon necessarily the state. It's the comfortability of the attorney or the title partner. I have different attorney and title partners in the same state that will do different things. So it's doing that due diligence in the beginning and saying, I want to double or I don't, making sure that they can handle that process. And you can make sure that it's taken care of and talked about in the very beginning.
Very good. I have someone a little annoyed that we skipped their question. And the reason I skipped your question, Ambition Streetwear, is not because I wanted to skip it, but because I was trying to stay on subject. And your question really didn't have anything to do with today's subject, but I'll go for it really quickly before we head out of here, okay? How can I get into flipping houses and how much do I need to start? Well, I'm glad you asked because I have a free training that I've put together for people just like you that haven't done their first deal yet. You can go to mattsfreetraining.com and there's about 30 minutes there that'll walk you through those beginning steps. And how much do you need to start? You need absolutely nothing. When I got started investing in real estate, I didn't have 2 nickels to rub together. If anyone is qualified to teach you how to do this with no money, including the marketing, I would raise my hand and put myself up against anybody doing that because that's exactly how I started. So, but just keep in mind, whatever you lack in money, you have to make up in sweat, right? And whatever you lack in experience, you have to make up in volume. So if you don't have the funds and you don't have the experience, be prepared to get your hustle on. All righty. Cool. So lastly, or I guess we're all done. Thank you, Rochelle. I really appreciate you being here. If you want to go and look more into Rochelle's services over at Constant Close, go to creativeclosers.net, creativeclosers.net. And then we'll do this again. We'll talk about something else, right? We'll talk about another creative strategy next time. Sound good?
Amazing. Sounds great. Thanks for having me.
Perfect. Thanks for being here. I appreciate you. All righty. So if you enjoyed today's show, who else do you know that might as well? There's a good chance that you do know someone else who would. And when their name comes to mind, please share it with them and ask them to click the subscribe button when they get here, and I'll take great care of them. All righty. So God loves you. So do I. Health, peace, blessings, and success to you. I'm Matt Terry.